Wednesday the 21st of February. Hope everybody had a great trading day yesterday. I am your host, Chuck Fulkerson. I want to welcome you to the Daily Market Commentary, where we do what we do each and every day. Take a look at the same 10 to 12 futures markets, but the most important thing is we leave the lines on the charts. And why do we leave the lines on the charts? I'm glad that you asked. We want to make sure that you can see how levels work out over time and that we maintain accountability in the trades that we identify. So let's go ahead without further ado and dive right in. I love that word, ado. But anyway, all right, diving in. Starting with the S&P. So the ES yesterday, we had a little bit of a wonky morning. I'm going to use the word wonky, where we went up and we went down and then we went up and then we came down. It was just a kind of a wonky day yesterday where we had a little bit of everything kind of happening. So in being so, we had set up, on yesterday's daily market commentary, a little bit of a 15-minute level. Now, always remember that 15-minute levels, you've got to be a little bit more suspect on those 15-minute areas, and price came right into that 15-minute area and came right back out of it. Didn't work out at all. I was kind of hoping that we'd get a little bit of a reversal out of it. Absolutely nothing on this one. So that one's a small loss if you stepped in front of that one. Now, that's okay because the Nasdaq level, which I'll show in a few minutes, worked out for a much bigger gain than that was a loss. And that's really, I tweeted it out yesterday. When your bigger wins are better than your smaller losses, you're gonna be doing okay as a trader. And that's really what makes this whole world go round. So what are we looking at today for the S&P? Well, I can still see a pullback into this area here. And so in doing such, I think that there is a potential for a breakdown below 2704. Now, I thought that at 2700, we may have a little hard time getting through there. There's some whole round number support there at 2700. So just keep that area in mind as a potential kind of stopping point. So I'm going to leave this line down here for a minute or two for you guys to just, if you want to take a look and draw that on your charts. It's up to your risk tolerance if you want to take that or not. Remember that if we do get a breakdown below here, your stop has to be above the last pivot before that. So that pivot right now, let's just say we came down from here, would be just above this high right there. So you've got to give it plenty of room in order to actually work out in your favor. Beyond that, I still like this area down here for a potential buy zone if price does indeed come back all the way to this range here. And that would put us on a daily time period right back into this little, rally up, pull back. Could give us another, third wave higher, if you will. So that being said, I've talked to a couple people recently that believe that this was just a kind of we'll call it a wave one, and this is a wave two. This is a new impulsive move down and a corrective move back up. And that's really one of the things to consider. Even if you were trading in a candle-to-candle style, you've got a reversal, kind of confirmed right here to come down. But I think ultimately it's just going to get you back to here. There's no reason still yet to go against our big picture overall direction on our weekly chart. We had those 2 weeks, we'll call it, what was it called? Volageddon, or the Armageddon that was volatility caused. But we'll kind of keep those areas in mind going forward. Looking at the Nasdaq, so the NQ level, whereas the S&P level missed by just a few points, the Nasdaq rallied up almost 100 points off of our area. So it actually did rally 100 points off of the area. So that was a very strong move. I'm going to take this area now and I'm going to remove that area from our charts, but that was a 100-point move off of that particular level. So hopefully some of you are able to catch that, and that's what I talk about. It's those bigger winners, and it came right back to the area that we would consider fair price or fair market, a fair price area right up in here, and then started to reverse back down. So hip hip hooray, as the super readers saved the day. Anybody knows what that reference is. So it was overall a pretty good move. So here's another little spot right here that we may want to take a look at in the future. This long wick up followed by price coming back down. I'm going to zoom in on that a little bit and try to trim that level down, as that's fairly wide that I have identified in there. So if I trim that level down just a bit to only this area here and really kind of wrap it around this one hammer candlestick here. And then I'm going to change my color here. Now remember, smaller time frame, smaller probabilities, right? So use your own judgment on any trades that you're going to take based on the risk that is identified. Looking above here, there's some areas above here that might be worth considering from a technical level for a potential sell, and that would be mostly this area right here. And I got to zoom in pretty deep to see that. So mind you, we're still on the 15-minute chart, but if I move that back to the hourly, that'll be a bit easier to see. So there's our areas for the Nasdaq that I think we're kind of chopping around in between for right now. Crude oil. So crude oil fallen off a little bit. I think that crude oil could be coming to an area, not figuratively, literally as we speak. Sometimes people get confused with figuratively and literally, but literally, we're coming to a potential area right now. Now, this area was an afternoon area with smaller, lower probabilities when that happens. I mean, not a lot of levels are being formed at 6 o'clock at night, but it is still something to consider, especially because it acted as resistance here in the past, and that's the area that we had bounced off of in the past here to turn into support. So, this becomes an area where orders tend to accumulate. You can see lots of reversals around this 61.50 price range. And so since there's lots of reversals around that price range, that becomes an area where orders tend to accumulate. It's really the accumulation of orders that I'm looking for, right? When we're looking for areas where the market may turn directions, it's those accumulations of orders, the inventory of buying and selling that is going to be most interested to me. And here's this fair price value area tells me that buyers and sellers come together at this region pretty regularly. So keep this area kind of in mind. Hopefully I'll get this video out before it moves too far away from that area, if indeed it is going to. Gold's continuing a little bit of weakness, but that's really kind of to be expected. If we see, we feel like there's some more strength coming in the markets, a little bit of weakness in gold is not an unheard of feature. So let's keep these areas that we have in place right now in gold. Bonds, looking at our bonds. So our bond market, we have made it back into the area that we had defined yesterday as a potential reversal point for bonds. So keep this area intact. Now, one of the things I don't like is the way we came into the level, and not a great, call it, arrival into this zone, but it is indeed still a chance to get short on the bonds from this region up here. So that one is in play. Let's let that one keep moving. The Aussie, for those of you that are still riding the Aussie trade, as in the words of Limp Bizkit, it just keeps rolling, 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 rolling. And anybody who understands that 90s reference, I'm dating myself. But it just keeps moving itself down off of this little sell area. The euro. So the euro area that we've identified yesterday, I talked about this as a potential reversal point. I'm going to remove this right now. I don't like this, the way we're coming into it. I don't like this indecision as we're heading down into it, so I'm going to let that one kind of go. Our Canadian dollar area was a bit of a breakout from yesterday, and that one as well is continuing to roll. Now, the Canadian dollar continuing to move down, the Aussie dollar continuing to move down is also part of the reason why I took that euro trade off. There's really no reason for me to be in that euro trade and try to trade counter to the ones that are still rolling, making money. Great British pound. So we did have an entry into our Great British Pound area right here. Same thing on this one. This is probably one that makes sense to remove. But if you're already in it, then I would manage the stop very tightly. I don't think we're going to get a huge bounce out of this one. Maybe you take a little bit of profits early on this one just based on what the euro and the Aussie and the Canadian are doing. Looking at our Japanese yen. So the Japanese yen, we got the breakout on the yen trade as well. It actually came down to what would be considered an opposing fair price value area, which would be an acceptable target one. So hopefully you took a little bit of profit from there, and you're getting, if you didn't get in, you're getting another bite at the apple right now, as you can consider the origin of the breakdown, this area right here, a potential reversal zone, and that's really the trade that we're getting set up with at the moment. And price could eventually make it down to this 9.22 area. So both of those are you know, good trades that set themselves up right now. It's either the breakout short or the reversal on the retest back into the area. So with that being said, I'm going to turn this thing off for the day. If you guys have any questions at all, please don't hesitate to reach out. Chuck@iiefinancial.com. Until tomorrow, I will see you soon. Later.